Hello guys, glad to have you on board again. Today we'll try to cover up a first intraday session for the 2019 new year. I think we have decent informations to be making this again as the volatility has been dropping in the stock market. We have some kind of the expected digestion throughout the forex market as well, which means we can open the doors to make intraday trades again. So first we're going to cover up a quick swing update, 2 minutes, just crawling through the assets I have on portfolio. Still having my bullish trade on the DAX, and so far it's still hard to figure out how this one is going to work. This one is still waiting for it to trigger. Cryptocurrency is absolutely not moving. They're just following the plan according to what I was expecting, which means we have the lower shadow candle right now. We'll see how it goes. I still tend to believe that we can have another couple days of some kind of neutrality before we eventually get to reactivate this trend. So waiting for this to play its game, and eventually for those who absolutely want to take a trade, I think what time frame is going to be interesting. I think we said 1 hour, if my memory is right. And yes, 1 hour trading is good, but we have no signal for now. You can clearly see that we have a divergence on the momentum, so I would say that's kind of, it's hard to say if it's going to be enough to trigger a trade, but I would say, okay, for those who really want to go aggressive, I think that this is okay some way to just do this, even though I still tend to believe that we can have another drop, trying to install candle closers, not just lower shadow candles like that. But to be honest, we've been targeting the fact that we could go to 38% Fibonacci, finding out that trend line, and that's exactly what we've been doing. So if you just follow the plan, I would say those who've been buying in here, you're fine. You can set a stop loss below the previous level and just let it go. If it does according to the plan, this is a perfect bullish signal. It's just it's gone too brutal for momentum to kind of trigger a pattern out there. But this is definitely something you would trade. We are below context in a bullish trend. So yes, normally this is exactly the kind of thing you're looking at buying. But I would suggest if you did buy that, definitely need a stop loss below that level. So still a large stop loss for that trade, even though it's not that big. If you've been entering right here at the level, let's say for example you've been putting a conditional order, I'd say okay, it's granted for you to confirm that trade, but keep on not putting the stop loss at break even, because we could very well have another shadow candle. Gold and silver consolidating as expected, euro dollar and GBP dollar as well. So kind of the dollar is going sideways, waiting for further informations, and we're definitely, I think, going to have them in the next few days. AUDNZD is still with a positive bias, but we still don't yet, we still haven't broke any resistance yet, so kind of waiting for this to happen to really confirm on that trade. Tesla, I'm going to reinforce today. We have pretty decent signals suggesting that this is 2 waves to the upside, 2 waves to the downside, so we could very well expect to stop in here. We're exactly trading in here in a 1 hour context. We got a profit taking structure, definitely the kind of trades I'm taking. You've got the stop loss pattern triggered out here, suggesting that we could try to go up here. I would be kind of surprised if we do. And obviously if we get on top of this, then this is where we trigger the stop losses and invalidate the scenario, but I don't think it's nearly going to be the case. So I think Tesla, we're kind of neutralizing in the mid part of the range to just get ourselves straight line to the downside part of that range, kind of an A, B, flat, C wave, very impulsive to come for the next wave. So if we get to retrace in here and go down, You can expect this to be damn freaking brutal. We can try to chase a little bit higher, but we already have the pattern, so yes, I'm going to trade Tesla no matter what. Stop loss is set obviously on top of that level, which means this is the minimum price for you to set a stop loss. I would say a decent stop loss is $365 to be far enough from that price. But regarding the expected price targets, I would say this is a pretty decent price to sell. We're targeting this with a stop loss in here, so it's still a 2.5 risk reward ratio out of the current prices, so I'm definitely getting in. I still have my selling entries on the top, which means I'm basically reinforcing in here to put a little bit of leverage out of this market, even though leverage will remain below 1. Okay, I'm not leverage trading on Tesla. I don't need this. The expected reward is 25%. I don't want to make a 25% reward on this trade. It would mean that for this I would be risking 7% of capital, which is totally unacceptable to me. I don't do that kind of stuff. I'm not going to risk more than 2.5%. So obviously on those 25% gain, because I've got one sell in here, the second one in there is going to put an average price in here, so I would probably risk 2% for 4 real percent, so probably leverage 0.5 on the account. So it means if we get to target, I'll probably take half this this number in here. But that's a pretty fucking decent trade. And moreover, if we're heading to the maximum targets and fucking up the range bottom in here, which I totally expect to be the case, in that perspective, it's going to be a 50% fucking drop and 25% on the account. But that's pretty far from this at the current stage. We're speculative trading, but obviously whenever we'll get to break this level where we've got stop losses accumulated, you know what I'm going to be doing. I'm obviously going to be reinforcing one more time this position. So until then, I would suggest probably at the current stage of that trade, putting an alert in here and a stop trade, stop trigger trade, stop entry. So it's going to be a selling breakout. All right, so stop entry in here to be set if we get back to the stop level, because we're definitely going to trend at that stage if we do that. Facebook, Nvidia, and Electronic Arts doing great. Everything's doing great as well in here. And Xiaomi isn't performing well on the opposite side. It's not always blue or red. It's just what we have in here is not good. The market is trying to break through the expected support, so we're going historical lows on Xiaomi, even though the numbers are great. The company is doing real great, but apparently it fails to bring new capital in here. We're minus 33% since the market open price, and that's not that good. It's not that bad either. It's just I think the market is trying to break through, but we had some kind of a momentum squeezing pattern ongoing. We've been overselling on that candle, and yesterday we just tried to break through with a candle close, which means either this is a bearish signal signaling that we're going to have another long bearish trend in here, or this is just excessive stop hunting kind of pattern, because I don't see any breakout triggering in here, and that's dangerous, because I still tend to believe that this is just a fake breakout, and whenever that comes, it's generally that the market will make some kind of morning star pattern, big red shadow, big red candle, kind of a doji coming right after, trying to break through support, finding a lot of bullish support, and then the day right after we got a bullish reactivation. And it's basically a 3 candlestick pattern structures that brings up the bottom. So I'll suggest we could very well do this. So I'm obviously not going to trigger the speculative stop loss if that's the condition. Obviously, if we do make another big red candle today or tomorrow morning, if I see another big red candle, I'll obviously take the trade out the day right after. But I don't suggest this is nearly a concern at that stage. It's just something to watch out for and eventually take out the speculative trade. I'm obviously going to keeping the buy and hold scenario that's been taken in here. So it's buy and hold. This is where I've been taking the speculative trade, and so far it isn't working at all. We may have a bearish trend, which means we had 2 bearish impulses. We're trying to make another one, which suggests this is not finding enough capital in here, but we do have an IPO who's been going in here throughout the bearish market. So anyway, to me, Xiaomi is something I'm going to keep in my portfolio for 5 years. So definitely not something that's going to be changing my mind in a short-term scenario. Or just obviously the speculative trades will have to be pulled out if that's about to come. All right, so we're 10 minutes in. Let's switch to intraday trades. And we're just going to take care of the SPX session that we could have this afternoon. We're going to try to kind of finding some decent boundaries to this. So how do you do that? And this is the process we're going to do. So first thing first, you have a look at the economic calendar. You don't trade without having a look at this. So we're going to have some short-term volatility probably with this, but very short term is not really that big. But yes, we got trade balance, could be a game changer. So it's going to be 2:30 p.m. To me on my local time frame UTC +1. So take that in account. And so we need this, and we've got 4 p.m. on my local time frame. So 2 sets of news or economic release today that we need to assess throughout the session. So one is going to be showing 1 hour before the market open, and the other is going to show up half an hour after the opening bell. So in a daily perspective, remember that whenever you do trade indices, and that's what we're going to try doing today on an intraday basis, you always want to have a look at the cash session first when you're having a look at the broader picture, the daily charts. Okay, daily charts, you're not having a look at SPX 500, which is the futures contract. You're having a look at SPX point, which is the cash index, in which you're going to see gaps and things like that that will be pretty reliable to use if you do get to trade intraday. So first we're having a look at the big picture, all right, just to know if we're trending on daily, if we're trading at daily support or something like that, something that you need to assess in terms of risk management. So just a quick answer in here, kind of what we were doing back then, trying to identify the broader picture's context. So in here we absolutely have no context. We know that this market is trying to stabilize, but at some point we're just probably going to go bearish again because we just have 2 bearish impulses. So either it's an ABC correction that is already terminated, but it doesn't really look like that, or we're going to have a 5th bearish impulse to come, which I still tend to believe is highly probable. So facing this, what we have right here right now, let me just give it what the fuck. Oh, okay, yes. Oh, something I need to update in here. Anyway, so SPX, absolutely no trend on the daily. We're 38% Fibonacci retracement on 27.75, 75 approximately. So what we're currently trading. So on the daily chart, we absolutely have no perspective. The momentum remains bearish. So we would kind of favor sideways actions in the intraday session, but more likely going to hold the bearish trades than the bullish ones. We're having a quick look at the 1 hour chart time frame as well to see what the intraday trades are going to be doing on a cash session perspective as well. And yes, we had some interesting things. So the market is crossing through the bearish context after kind of a consolidation. I would say wave 1, 2, 3, 4, 5. So it could be great for an ending bullish wave, but we have no bearish signals on momentum, and moreover we're kind of trading higher prices right now. We're 25.64, so no, we're trading in near the current prices. So we're going to open at yesterday's prices, or on the top of them. This is where we got 25.64. So I expect the market to try an attempt to break a little bit higher. We got a 50% Fibonacci retracement on 25.74. The prices we've been highlighting already. We've got that tiny resistance in here, and we've got a breakout target right there. So yes, this is a very dense technical cluster, probably going to be a resistant cluster that I will try to trade, but we'll see if the market can manage to set itself up and higher from that level. But definitely I think we're going to try trading in that area today. It's a low volume area, so obviously it is a breakout area, so there will be associated stop losses if you do try to trade this bearish, which I probably will do as well. Now we're going to go intraday. So in intraday we're going to have a look at the futures contracts, and I suggest we have a look at a 15-minute chart signal to just show the short-term cycles. What kind of cycles are we trading right now? What does this look like? And is this something we can exploit? So we can clearly see the market in here is trying to trend, but it's pretty hard to figure out what the hell is this. I would say in here, just to find some kind of a wave structure, I would say definitely we've got a first impulse in here. It's a pretty damn crazy impulse, and this is the wave that's been trending. Look at the boxes we're unfolding in here, so suggesting this is the trend wave, trend subwave. So we could have a wave 1 extended structure. That's pretty rare, but that does happen some way, and if that's what's at play, then this is what we could have. Wave 3, 4, 5 to be coming in here, which is and would be an ending diagonal therefore, which means we could have what we thought, which is basically a terminating ending diagonal to terminate that first bullish impulse. We'll have 2 waves to the downside to forecome, and then another set of 5 waves bullish to the bull side to probably head to other major resistances, the 2018 year open and all the big prices to sell later this year for the big short, but not now. I would say right now we're kind of having a tiny bullish bias to just go searching for the wave 5, and normally wave 5 should be shorter than wave 3. So if we have a look at this in a 15-minute perspective, this is what I will have to share with you guys. I would say picking the lowest low in here. Let's just put a magnet again. So I'd say, yeah, lowest low to highest high of wave 3 to the beginning of wave 5, which is probably going to be there. That would suggest normally we should be having diagonal structures. So yes, we could have wave 5 terminating in here, but anyway, we're just going to trade whenever the market will reach out to the context or higher than the context, but a 15-minute signal in context or slightly higher than the context will be really interesting to trade today. So I would say in a speculative perspective, definitely the 15-minute bearish signals will be a lot more interesting to take in this current context we're having. But that's all I can tell. We've got probably what has been a wave 1 bullish extended impulse. So it's not the usual 1, 2, 3, 5 with the 3 that third wave is extended. We sometimes have wave 5 extended or wave 1, and it happens. It's obviously less probable, but it's been happening sometimes, and it does probably in here as well. So if we go to even a shorter term time frame picture, I suggest trading today, and this is generally the kind of setup I do use myself when I do make some intraday trades to get more opportunities. I kind of assess this to be my context, so I do hope today we're going to get to trigger a 15-minute trade, because those are the ones I'll probably have to take overnight. It's going to last for 1 to 2 days at best, 3 days in some cases. So 15-minute signals can last more than a day, but for a pure intraday scenario, I will just take care of a 2-minute chart signal, and I generally tend to trade with those two next to each other. And if I get to use this 2-minute chart time frame, in here is pure and simply, in here anytime we get to context, I'm searching for bearish signals. I know I'll be favoring the bearish trades. Alright, so any bearish trade is going to be the one I'll favor, but I'm definitely going to take some buying trades as well if some scenarios shows up. That's basically, in here is where you've got the latest ones. This is where we got oversold cluster right into context. In here as well was a decent opportunity to trade, but that wasn't the US session, okay? That was throughout the Euro session. But even though this is where you wanted to buy the bottoms, this is where you had interesting prices. Normally, if you cut those prices, you should be stop at break even at the current time. If it goes down, you're out. If it goes up, you're nice. And normally, you should take your profits whenever you reach out to the bearish context and having some bearish signals. And this is where, obviously, you're going to try to make a reversal. This is what I'll be trying to catch up on today and probably later today. So, obviously, I'm going to try making a follow through of this throughout Discord and let you know if I do trigger trades. Once again, I don't do real-time trading signaling because I hate to feed people. I want you guys to be able to learn how to feed yourselves, so I'm definitely not going to give you real-time trades. I'll give you the trades 5 minutes after. Just when the trade is validated, I'll give you the signal afterwards, so you'll know when I've traded, but you don't and you won't be able to just copy blindly what I just done. So that's the way I'm going to do this. So for now, we basically have sideways action, waiting for the US session money to play its game, and basically I think we're just going to die out there for lunch break, and then we're going to try searching higher prices, I think, at the open, and it's going to be probably a sideways action today on the intraday, bullish at the open probably, and then bearish to terminate the session, and kind of an uninteresting session in a daily structure basis, which means today's candle is probably not going to be a trend candle. All right. Bye guys, I hope you are going to have a great session about that. You know what I'm going to do, so normally you should be able to trade all by yourself. You and I have the same tools, so I just gave you the strategy to help you through this today, but normally this is the kind of job you'll be able to do in any other assets on your own. So if you don't want to be trading the SPX, let's say you want to trade, I don't know, the FTSE or any other index, then normally you should be able to do it just by applying the same rules. You're trying to put a context of the market. Intraday trades just take 2 minutes to verify what the daily chart is doing. Cash session, really important. And then you go intraday, you can have a look at the 1 hour chart. It's definitely giving good information generally. Still on the cash market, you have a look at 1 hour cash market to see the cash market structure. And then you go pure intraday, 15 minute and 2 minutes, the one you will be trading on in an intraday session basis. And you wait for, you're searching for signals in those time frame. Or if you're less aggressive, you can just trade the 5 minutes all by itself, and you just have a look and trade on 5 minutes, and obviously you got just one time frame. This is why I tend to like the 2 minute and 15 minute, because it gives you 2 different time frames opportunities, so twice the scenario and two different time frames opportunities. But that's my preference. Obviously, if you're more familiar with the 5 minute short time frame, then suit yourself. You obviously can apply the strategy in here as well. Just give it an example. If you were the kind of intraday trader who doesn't want to have multi-time frame things to have a look at, just for some reasons you don't have a pro account on TradingView, so you can do the double chart in here. In that perspective, I would say don't bother yourself buying something you don't need. If you're good with 5 minutes, I would say it's pretty decent to trade with that as well. And in that perspective today, what would you have? All right, fuck it, momentum is messing around. All right, so in that perspective, 5 minute signal in here is all you've got. Okay, it's all you had today, and as you can see, it's the same signal that we had in the 2 minute short time frame, but the 2 minute short time frame has been given twice that signal, first in here, second in here, but in a 5 minute perspective, just this one was tradable. Same thing goes in here. You had a 5-minute signal right in here, right in context. The market broke a little bit higher than that, but that's all it did. But definitely something you could have traded in here. So bearish signal in there, you probably would have profit taken in here, or at least secured a trade, and you would still normally be in that trade, as normally your stop loss would have been set on top of the market context, which means right now your stop probably is going to be there, and you're still not stopped, but you are secured a trade, which means you got in here, you're secured 50% of the trade, which means normally your stop paid, your paid stop loss, and if the market goes there, you're out. If the market goes down, you're in. But normally, this is where you should have reversed the position. In here, you should have taken the entire profits out and been turning bullish. All right? You see how it's been playing. You just played throughout the game. Just use the replay for some educational purpose only. I got 5 minutes for you guys. So, all right. So this is how we do those things. Okay, you go candle by candle. Okay, price okay, momentum okay. This is definitely where you trade. Got bearish engulfing pattern, everything you need. You go bearish in here. All right, I'm just gonna delete those things. But if you see this in real time, normally you should really don't hesitate to trade. First thing you need to hesitate in here is the thing you got the context alert. So that's the new version I'm still working on. So you won't have context written out there. You're gonna have extreme price written, but it's the same thing. Okay, don't bother yourself with that. So all that says, it doesn't say you don't need to trade. All right, it just says that you need to assess what the higher time frames context are. So remember that the higher context is 6 times the 5 minutes, so it's 1 hour. No, it's not 1 hour. It's going to be 30 minutes. All right, so you have a look at the 30 minutes. All right, so in a 30-minute, you're obviously trading in context, but you're trading in a context in here as well. So you're going to have a look at 2 fucking hours. We're going to need to have a look at a time frame chart that doesn't trade the context. We're in context in here as well. 4 hour, okay, 4 hour we're not. But we're trading the bearish 4-hour context in here, which means you obviously favor the bearish trades, okay? But in 5 minutes, this is the conclusion we've been coming up with. So it definitely, we should favor the selling entries in here, but that doesn't mean we cannot buy, okay? We can buy, but you're going to buy leverage divided by 2, and you're going to sell fully leveraged. Because this trade is probably going to have a longer perspective that could go up to 4-hour chart. All right, that's all it means. Okay, context means you can contextualize that trade to higher time frames. Sorry, we're using replay, so let's go back to this. All right, this is where we've been replaying. So you took that trade, that's perfect. All right, let's wait. Okay, so when you have this, normally you know where to put your stop loss. All right, so you've been taking that trade. Stop loss has to be set on top of the context, so you don't put in a stop loss right in here. Let's say you put a stop loss in here, at least invalidation, that's the way I like to call them. I would say you put in an alert in here, and if the market goes there, there's somehow a problem. We should fail anytime we try to break through through this, okay? And taking that trade is pretty damn aggressive. Normally in here you just don't take that trade. You wait for a better pattern. Overbought is not enough when the market is trending like that. Overbought condition is normal. So I would suggest normally you should have waited for that pattern, the profit taking. So I would say that's generally in here that you take the trade. All right? But a taking profit structure generally tells you one thing, that you need to put a large stop loss, okay? No big leverage when you're trading a taking profit structure. Okay, so we keep on going. Market goes slightly higher and fails. That's great. This is where you got. Okay, first oversold signal, you know that the market is great. We've retraced 50% of the trend channel. That's not enough. What you're looking at for validation of that trade is when the market retraces to the lower boundary, so the support, the trend support. All right, this is interesting. You've had kind of a taking profit structure in here, near but not at the trend channel support. So I would say in that perspective, you put a stop loss in here, because if the market goes higher, you rather like to get out to sell again at better prices. Okay, nothing. Okay, now you've got something, divergent structure, and you've got the blue triangle right in the context. So this is definitely something you should consider profit taking partially. I'd say 25% profit taking in here, and you pay for the stop loss. Okay, it costs you 25% to profit taking here, and your stop loss is paid, so you're out of troubles. All right. The market's going sideways. Nothing interesting. All right. As you can see, trend is still trying to set itself, but we're not trading anything interesting. We're not trading in context. We just secured the trade, and the market is going sideways. All right. Okay, that's more interesting. We're reaching out to context, and we've got a profit-taking structure. So I would say in here, we're nearly at the context, so that's something to discuss. But I would say in here, you take another layer of 25% profit taking. So in here, you take gains, okay? You took your profits, but you still let it go if the trade decides to trigger brutally. Okay, you still get yourself in, but as it doesn't really work as expected, you're locking on the gains just to make sure you're going to win something and just don't lose it stupidly. Okay, second attempt in here. I would say at that stage you just let it go. Okay, you've got 50% locked in, and it means if it goes wrong, you're just going to be eventually at that stage. I would say, okay, you put it at break even. Okay, and you just don't risk it. You just don't risk anything. If the market goes there, you're out. If the market goes down, you're in, and you so you're out. But normally you should have bought in here. You should have bought that. This is the signal we've been talking about. So normally in here you get the fuck out and you reverse the position if you're aggressive. Okay, but normally this is exactly what you've been doing. You profit take entirely, you go bullish in here, and basically you pay for that trade with this one. Okay, so that's not complicated. I know I don't want to tell you that trading is simple, because getting into that level of confidence in trading, which is not overconfident but confident enough to don't switch the trades every 2 minutes and don't let the doubts come in and pour in your strategy. But this requires a lot of practicing, a lot of experience to get there. So this is things you will have to work with to get yourself in the same position as mine. But obviously you won't be that confident if you're starting to trade. But don't blame yourself. Only time will help you getting better. And give yourself that time. That's all, and that's the best gift you should do. So remember that you do trade with low leverage, because leverage is going to buy you some time when you're learning. And obviously that's what you need. Okay, so try to get yourself into a real mindset and a real trading perspective. Don't blame yourself when you make mistakes. Everybody does, me included, and there's always something to learn out of a mistake. All right. That being said, bye guys. I'm gonna work this afternoon on the indicators, trying to bring you guys a sine wave beta back to work. Because some of you guys are still using this one and pretty damn like it. So I'll do anything I can to try bringing it back.